Tesla Model 3 in that country. But ongoing price wars in China, these EV price wars, have some insiders worrying their whole sector could end up facing a crisis of epic proportions.
When the EV market fell, the world economy shook. Billions evaporated overnight. Supply chains froze, battery plants went dark. But the hidden fallout? Nations betting on green energy just got burned, and you're paying the price. So what happens to your energy bills? To the jobs tied to this industry? To the planet itself? By the end of this video, you'll see it's not just cars that crashed, it's the foundation of the future, the EV market's sudden collapse. In a single day, the electric vehicle market lost billions, sending shockwaves through the global economy. The unexpected collapse came swiftly, catching nearly everyone off guard. Stock prices plummeted almost overnight as manufacturers scrambled to assess the damage. Investors, once optimistic about the future of electric vehicles, found themselves in a panic. The sudden shift in sentiment reverberated through financial markets, creating a crisis that no one had seen coming. The collapse was marked by an almost immediate drop in the value of electric vehicle companies. Shares in major manufacturers like Tesla, Rivian, and Lucid Motors lost a significant portion of their value, as the market seemed to implode in real time. Analysts, who had been praising the growth of the EV sector, now scrambled to issue grim warnings. Some speculated that the market had been inflated by an unsustainable level of hype and oversaturation, while others pointed to supply chain problems, inflation, and rising interest rates as contributing factors. What was once viewed as the future of transportation now seemed to be teetering on the edge of a cliff. Manufacturers were left in a difficult position. With stocks tanking, they found themselves reassessing their production goals, and many were forced to cut back on manufacturing plans. The rush to meet ambitious production targets in previous years now appeared reckless. The supply chain was flooded with cars that nobody seemed to want anymore. In a matter of hours, the narrative surrounding electric vehicles had changed from hopeful innovation to financial uncertainty. The promise of a green future seemed dimmer, and suddenly, no one knew what to expect next. But this was just the beginning. A storm was brewing, and no one was prepared for its intensity. Dealerships in crisis. Showrooms that once buzzed with eager customers now stand silent, overwhelmed by unsold inventory. Dealerships across the country, once thriving with the excitement of new electric models, found themselves in a desperate scramble to offload their excess stock. The atmosphere had shifted from anticipation to panic. What had been hailed as a revolutionary shift in the automotive industry now felt like a burden. The cars, once considered the future of transportation, were now just surplus products that nobody seemed to want. Dealerships slashed prices, offering massive discounts, throwing in free services, and advertising promotions in an attempt to attract buyers. But the incentives weren't enough. The customer base, once enthusiastic about the idea of electric vehicles, now found themselves questioning the long-term value of their investments. The market crash had shaken their confidence, leaving them uncertain about whether to buy now or wait for prices to drop further. Dealerships, caught in the middle, faced crushing financial consequences as they tried to balance between getting rid of cars and maintaining profitability. Behind closed doors, tough decisions were being made. Some dealerships, struggling with mounting debts and sinking sales, were forced to lay off employees or reduce staff hours. The financial strain forced many to reconsider their business strategies. As some manufacturers cut back production, dealerships found themselves with massive amounts of unsold stock, and the pressure to stay afloat intensified. With an oversupply of vehicles and little demand to match, many felt the weight of the crisis. The economic model that had once driven their success was no longer sustainable. As the crisis deepened, some dealerships were forced to make desperate decisions to stay afloat. If you're finding this eye-opening, hit that like button. It helps us get the truth out there. And if you're seeing the big picture unfold, drop a comment below. What do you think of these shocking developments? Your thoughts could change the conversation around this crisis. The consumer's dilemma. For buyers, what seemed like a golden opportunity is now a maze of uncertainty. In the wake of the market crash, consumers rushed to take advantage of falling prices. The idea of getting a great deal on a new electric vehicle seemed irresistible. However, what had once been a promising opportunity was quickly overshadowed by confusion and fear. Buyers who had been eagerly waiting for electric vehicles to become more affordable now faced the difficult question of whether they should act immediately or wait even longer as prices continued to fluctuate. The market chaos left many wondering if they were truly getting a good deal or simply buying into a sinking ship. Eco-conscious buyers, who had originally been drawn to the promise of a cleaner, greener future, now found themselves questioning whether the electric vehicle market could even survive in the long term. Was this just a passing trend, or was it truly the future of transportation? The uncertainty was palpable. On the other hand, price-driven buyers, once enticed by the future of electric cars, were now simply hunting for bargains. The crash had made EVs far more affordable, but at what cost? Were these discounts worth the potential risks involved? The emotional stakes were high, as many buyers had already made significant financial commitments, either through savings or loans, to purchase an electric vehicle. Now, they were left in limbo. What once seemed like a smart investment had turned into a source of anxiety. The dream of owning a cutting-edge electric car was clouded by the fear that they might have been part of a fleeting bubble. Should they jump at the chance for a deal, or should they wait for the market to stabilize? With so many conflicting emotions at play, the true cost of the crash became painfully clear. In the midst of chaos, the true cost of the crash becomes painfully clear. The global ripple effect. What happens in the EV market doesn't stay in the EV market. It ripples across industries worldwide. The sudden collapse of the electric vehicle market didn't just affect manufacturers, dealerships, and consumers. It sent shockwaves through the global economy, triggering reactions in industries and economies that were indirectly tied to the EV boom. The most immediate impact was on global supply chains, where disruptions in the automotive sector caused delays in parts production, manufacturing, and distribution. Technology suppliers, who had banked on steady growth in the EV market, found themselves facing a surplus of unused components and a shrinking demand. The fallout extended beyond the automotive industry. The energy sector, particularly renewable energy companies that had been eager to support the rise of electric vehicles, found themselves struggling to maintain their momentum. Battery manufacturers, who had invested heavily in scaling up production for EVs, were suddenly left with excess stock and fewer buyers. This disruption was felt globally, as international trade routes were altered and economies began to adjust to the fallout of a market that had been growing rapidly but was now on the brink of collapse. The geopolitical consequences were equally significant. Nations that had invested in infrastructure for electric vehicles, charging stations, energy grids, and production facilities, now faced the daunting task of reconsidering their strategies. Countries that had made bold moves to transition away from fossil fuels were left grappling with a reality that undermined their green energy goals. The interconnectedness of industries had never been more evident, and the ripples of the collapse reached far beyond the auto sector. As the dust settles, the world begins to grasp the full extent of the damage. Overproduction and oversupply. Manufacturers raced to meet ambitious targets, but overproduction led to an oversupply that no one anticipated. In their eagerness to capitalize on the soaring demand for electric vehicles, manufacturers across the globe pushed production to unprecedented levels. The idea was simple: flood the market with as many electric cars as possible, believing that consumer interest would keep pace. They ramped up their factories, secured massive orders for parts, and forecasted exponential growth, assuming that the future was theirs to shape. However, the reality was far more complex. Manufacturers realized demand was far less than anticipated, leading to overproduction. Their factories flooded with unsold cars, as ambitious targets turned into miscalculations. Excess stock piled up, unable to be absorbed by a market with limited appetite for EVs. The issue was a misreading of market signals. As manufacturers doubled down on electric vehicle production, they ignored subtle indicators that the market was not yet ready for the volume they were creating. Consumers were still hesitant to make the switch, held back by concerns over charging infrastructure, battery life, and the perceived high cost of ownership. Despite these hesitations, manufacturers forged ahead, believing the market would catch up. But by the time the oversupply became evident, it was already too late. The shelves are stocked, but the buyers are nowhere to be found. Shifting consumer preferences. Once hailed as the future, electric vehicles now face growing skepticism from consumers. The dream of an all-electric future was fading fast. What was once an exciting opportunity to join the green revolution had turned into a series of disillusionments for many buyers. Concerns about the long-term viability of electric vehicles grew louder. What had initially been a promising new frontier in automotive technology now faced a growing backlash. One of the most prominent reasons for this shift was the evolving consumer perception of electric vehicles' reliability and practicality. The early excitement surrounding EVs was built on promises of cutting-edge technology, low operating costs, and environmental benefits. However, the reality for many consumers was quite different. Range anxiety, fear of running out of charge before reaching a destination, was a major concern. Even with an expanding network of charging stations, many potential buyers still felt uneasy about the practicality of relying solely on electric vehicles. The high upfront cost of electric vehicles compared to gasoline cars deterred buyers, despite long-term savings. Concerns over battery lifespan and charging infrastructure eroded confidence, with surveys showing growing hesitation about EV adoption and its long-term value. The dream of widespread EV adoption begins to fade. Economic pressures and policy shifts, government incentives vanish, and economic headwinds intensify, leaving the EV market vulnerable. Just as the electric vehicle market seemed to be taking off, a series of economic challenges began to emerge, pulling the rug out from under the industry's rapid growth. The first blow came when governments, which had been offering subsidies and tax incentives to encourage the purchase of electric vehicles, began to scale back their support. These incentives had been a key factor in driving demand, making EVs more affordable and attractive to consumers. As subsidies disappeared, the cost of EVs became an even greater barrier to entry for many potential buyers. Broader economic pressures, including inflation and rising interest rates, reduced consumers' purchasing power. With wages stagnating and costs rising, many reassessed their ability to buy vehicles, while the withdrawal of financial support worsened the decline in demand. The result was a market that was suddenly unprepared for a crash. Consumers were no longer incentivized to make the switch to electric vehicles, and with rising costs and tightening budgets, many turned to more affordable options. The shrinking pool of buyers, coupled with the shift in economic conditions, made the market vulnerable to further collapse. As government support eroded, so too did the foundation that had been built for the EV industry. With support eroding, the foundation of the EV market crumbles. The role of speculation and investment. Investors, once eager to back the green revolution, now scramble to salvage their portfolios. In the years leading up to the market collapse, venture capital and private equity poured billions of dollars into the electric vehicle industry. This influx of capital fueled rapid growth, helping companies scale their production and reach ambitious goals. Investors were betting on the future of electric vehicles, believing that the shift from fossil fuels to renewable energy would drive massive returns. As the market strained, investors faced steep losses. Overvalued, unprofitable EV companies exposed the speculative nature of investments, where future potential outweighed current earnings, creating a bubble destined to burst. As stock prices plummeted and the market entered freefall, investors scrambled to salvage whatever they could. Some pulled out entirely, while others tried to salvage their positions by selling off assets in a panic. This mass exodus of capital only accelerated the decline, as companies found themselves under immense pressure to adjust or face the consequences. The speculative frenzy that had once driven the EV market had now come to an abrupt end. The speculative frenzy ends, leaving a trail of financial wreckage, bankruptcies, and bailouts. Firms that once dominated the electric vehicle landscape now face insolvency, while governments step in with bailouts. The financial disaster brought on by the EV market collapse took a devastating toll on many companies that had been industry leaders just months prior. Manufacturers that had once seemed invincible were now on the brink of bankruptcy, their stock prices in freefall, and their operations slowing down or grinding to a halt. Major players in the electric vehicle sector, such as several high-profile startups, faced severe liquidity crises, with their cash reserves dwindling and debts mounting. Governments intervened with bailouts to prevent collapse, preserving jobs and infrastructure. However, these financial injections raised concerns about taxpayer involvement, with resources diverted from other sectors, highlighting long-term fiscal responsibility issues. One particular manufacturer, which had been a frontrunner in EV innovation, found itself deep in debt, unable to meet production targets, and facing massive consumer dissatisfaction. As it declared bankruptcy, the company's board negotiated with the government to secure a rescue package. While the deal was designed to preserve jobs and prevent a broader collapse, it left many wondering whether the industry had been too reliant on promises of future success without taking necessary precautions. As a result, the electric vehicle landscape was reshaped. But at what cost? The impact on workers. Thousands lose their jobs as the electric vehicle industry contracts, leading to widespread labor unrest. As the EV market crumbled, so did needed the workforce that had been built to sustain its growth. Manufacturers were forced to scale back production, eliminate shifts, and even close entire factories. The once promising sector became a scene of layoffs, redundancies, and strikes as workers found themselves facing an uncertain future. What had been a thriving job market with promises of green energy jobs and innovative technologies quickly turned into one of the most painful economic sectors. For EV workers, the crash was more than job loss. It threatened their livelihoods. Those who retrained for the future now faced job scarcity, with unions struggling to support workers in an industry unraveling too quickly for retraining or negotiation. The emotional toll was significant, as workers who had invested not just time but hope in the future of electric vehicles began to question the promises made to them. Labor protests became more frequent as workers demanded not only fair severance packages, but also answers about the future of the industry. This crisis was a wake-up call, shifting the conversation about labor rights in tech-heavy industries. Workers, once excited about working in the clean tech sector, now found themselves marginalized by an industry that was unable to deliver on its promises. The workforce demands accountability and a path forward. Environmental setbacks, the push for green energy stalls as the electric vehicle market falters. The EV industry had long been touted as a key pillar in the global fight against climate change. But as the market began to collapse, the entire green energy movement suffered a blow. What had once been a symbol of progress in reducing emissions and transitioning to renewable energy now seemed vulnerable to the very market forces it had hoped to overcome. Public perception of electric vehicles and their role in environmental protection began to change. Consumers and environmental advocates who had been steadfast in their support of electric vehicles now questioned whether the promise of sustainable transportation was truly achievable. As the EV market faltered, environmental groups struggled with the fallout. The perception of EVs as sustainable shifted, with abandoned plants and unsold cars tarnishing their image. The crash undermined public trust in the green movement. Despite EVs' environmental potential, the effects were not limited to consumer sentiment. The energy sector, which had invested heavily in renewable sources of power to charge these vehicles, began facing its own setbacks. As EV demand dropped, renewable energy projects that were linked to EV adoption were delayed or cancelled. In short, the market crash had become a tipping point for the broader environmental movement, casting doubt on the future of sustainable transportation. Green energy advocates found themselves in a difficult position as the credibility of the EV industry came into question. The setback casts doubt on the future of sustainable transportation. The consumer's new reality. Buyers who once dreamed of affordable EVs now face a market in turmoil. The collapse of the electric vehicle market, while offering some potential opportunities for bargain hunters, has left many consumers confused and disillusioned. For those who had been eagerly awaiting the day when electric vehicles would become more affordable, the market crash presented a cruel twist. Once promised rebates, tax credits, and subsidies had evaporated as the market faltered, leaving many potential buyers unsure about whether to take the plunge into an uncertain and rapidly changing market. Early adopters faced frustration as their high-priced EVs depreciated. As new prices dropped, they questioned their decisions, wondering if they'd been misled by marketing. Some reconsidered switching to EVs, viewing the market as unstable and risky. At the same time, new buyers, eager to get a deal on an electric vehicle, now faced an entirely different set of challenges. As dealerships scrambled to get rid of excess inventory, it wasn't just about finding a good price. Buyers now had to wade through a chaotic and unpredictable market, unsure about which models to trust or which companies would even survive in the long run. The dream of affordable electric mobility became a distant hope as the market continued to teeter on the brink. The dream of affordable electric mobility becomes a distant hope. Lessons learned. The crash offers hard-earned lessons for manufacturers, investors, and policymakers. In the wake of the market collapse, the electric vehicle industry found itself at a crossroads. The once promising sector was now forced to confront the factors that had led to its downfall: overproduction, speculative investment, and misguided policy shifts. These key issues had driven the industry to overextend, pushing it to a point where it could not sustain itself. Manufacturers had aggressively ramped up production, hoping for explosive growth, but failed to account for the realities of a market that was not ready for such a dramatic surge in supply. The resulting oversupply flooded the market, causing prices to plummet and leaving dealers with unsold inventory. Speculation fueled EV growth, with investors betting billions on unproven companies. Overvaluations and instability followed, Driven by hype rather than performance, policymakers encouraged rapid growth through subsidies, neglecting long-term industry sustainability. Now, with the dust settling, industry experts have called for a more cautious and measured approach to recovery. Manufacturers must learn to balance supply with demand, ensuring that production aligns with consumer interest. Investors likewise must focus on long-term viability rather than short-term speculation. Policymakers must provide support, but with stricter regulations to ensure that the lessons of overproduction and unsustainable growth are not forgotten. The industry reflects on its missteps, seeking a path to recovery. Industry restructuring. The EV industry begins to rebuild, focusing on innovation and consumer confidence. The collapse of the market forced companies to reevaluate their business models and strategies. No longer could they rely solely on rapid expansion and market hype. The industry had to return to its roots: innovation, quality, and consumer trust. This restructuring phase saw some companies adapt and thrive, while others faltered. Those who succeeded in rebuilding focused on creating products that met the real needs of consumers, not just on pushing out as many vehicles as possible. Mergers allowed companies to pool resources and stabilize. Startups were absorbed by larger manufacturers, focusing on high-quality, reliable vehicles. Advancements in battery life and charging became key to recovery, shifting attention from quantity to sustainable product refinement. Meanwhile, production methods were reshaped to be more efficient and cost-effective. Companies were no longer just making cars. They were designing a sustainable ecosystem for transportation. This shift in focus meant that each new model wasn't just another electric vehicle. It was a part of a broader movement towards sustainable living. A new era of electric vehicles emerged from the ashes, one where quality, efficiency, and consumer confidence were at the forefront. Policy reforms and incentives. Governments reintroduced support for the EV market, but with stricter regulations. After the crash, governments recognized the need to intervene, but this time with a more cautious approach. The previous wave of incentives and subsidies had contributed to the market's rapid rise, but it also encouraged unsustainable growth. Now, policymakers were tasked with restructuring their support to ensure that it was aligned with long-term goals of sustainability and market stability. New policies balanced innovation with sustainability, reducing reliance on handouts. Subsidies were restructured to reward progress in affordability and reliability, while regulations addressed overproduction, advertising, and charging infrastructure issues. In contrast to the previous policy framework, the reformed approach sought to create a more stable environment for manufacturers and consumers alike. Rather than offering blanket incentives, the government now targeted specific areas of need, such as battery technology and renewable energy integration, ensuring that every dollar spent was an investment in the future of the industry. A more cautious but hopeful future for electric vehicles began to take shape as these new policies set the stage for sustainable growth. You don't want to miss the next part of this unfolding story. Subscribe now so you're the first to get the latest updates. Trust me, what's coming next could change everything you think you know about the EV industry. Don't miss out. Hit subscribe and stay informed. The consumer's role in the new EV landscape. Consumers now hold the power to shape the future of electric vehicles. The market crash had fundamentally shifted the relationship between manufacturers and consumers. In the aftermath, it became clear that the future of electric vehicles was no longer in the hands of corporations alone. With consumers having borne much of the fallout from the crash, they were now in a unique position to influence the direction of the industry. Consumers are now vocal, informed, and demanding, no longer swayed by flashy marketing. They seek value, reliability, and sustainability, shifting demand toward vehicles that align with their values, not just the latest technology. Grassroots movements began to take shape, with advocacy groups pushing for greater transparency and accountability from EV manufacturers. Consumers were no longer just buyers. They were active participants in the development of the industry. Feedback and demands for better products, clearer environmental standards, and lower prices played a key role in shaping the new generation of electric vehicles. The power had shifted, and the future of the EV market would be shaped by those who were purchasing the cars, not just those who were building them. The road ahead is uncertain, but the journey continues. Now that you've seen the full story behind the EV crash, it's clear that the future of this industry is uncertain. Don't get left behind. Subscribe to stay ahead of the curve. Hit the like button if you found this video helpful, and share your thoughts in the comments below. We're just getting started, and you won't want to miss what's coming next. Stay informed and protect your future.